In this masterclass, I'm going to show you how supply and demand works at the deepest level and why mastering it completely transformed my own trading results and will change yours too. By the end of this video, you will understand all these concepts and be able to find trades based on supply and demand. And later I'll tell you about a $20,000 trading competition prize pool that you can join for free. So let's talk about the theory of supply and demand first. And so if we're looking at just like, let's say a market of gold, well, as the price of gold is really low, there's gonna be a low supply of it because there's not that many people wanting to sell it. Why would I sell, this gold bar that I think is valuable for a really low amount of money? But as the price gets really high, more and more people are gonna think, well, hey, I want to sell my bar of gold because I can get a lot of money for it because the price of it is really high. I'm getting a lot of value. But then on the flip side, for demand, well, if something's really, really expensive, like a bar of gold, I'm not gonna want it because I don't wanna pay that much money for something I think I can get for a lesser value later. And so as time goes on and as the price goes down, demand actually increases. And so you have imbalances where supply can be really high, but no one wants to actually buy it because it's overvalued. Or times where demand is really high, but nobody wants to sell it because they don't want to sell it for dirt cheap. And so in the middle here, that's where you have more of an equilibrium where buyers and sellers meet. And so when it comes to actually trading, what you can have is, and what you create is supply and demand zones. Based on stuff that we'll talk about in a minute of how you identify these, but based on past observations, you can start to create these and know that, okay, well, when the price comes down to this demand zone, it's likely that it's oversold, that the price is so cheap that there's likely to be a high demand, which will, over time, increase the price because more and more people want to buy it. And so the supply actually starts to dry up. And so if there's a finite amount of something, the price is going to go up over time as more and more people buy it and more people want it. But eventually it's going to get to a point where it's at a price where more people want to start to sell it because they can get a really high amount of money for it. And so the price will go down. And so quite often, you'll hit these extreme areas and have strong moves off of them, and then you'll get into that more middle ground between the two where it has that equilibrium and it'll have more of a choppy market. And so this is why when you look at a stock chart, it's important to understand that these extremes are the important part to pay attention to, because you'll likely have the market bounce off these zones quickly and, like I said, chop around in the middle. And then it will, once it comes up to a level, you have that potential to reverse off of it. And so that's how you want to look at trading these levels. And so this is how I like to use them for trading, is I like to watch for key areas where I think that the market might find a supply or demand, and it's likely to reverse off of the supply and demand zone, and then you can capture a nice swing off of that. In this trade right here, the market came down to this demand zone down here, and I bought, went long, and captured a move up and made about $1,500 on this trade. And then as it came up to where I thought there was another supply zone, I got out of the trade because it's likely that it reverses off that zone, and I wanted to get out of my profitable trade and move on with my day. Now this is horizontal supply and demand zones. What you can actually have is trending supply and demand zones where the market is moving down slowly and it continues to move lower over time. But what you get is it starts to bounce off of supply and demand zones as it creates those. And so you can start to take trades as it tests these levels. Another way to do this is it can actually be created with more trend lines. And so every time it comes up to that trend line, you can think of it as a supply zone. It's just more horizontal. A good example of this is a trade I took recently where the market had a demand trend level down here that I wanted to take a trade off of. And so it bounced around, moved up higher, and then sold off to that level to where I thought, okay, it's likely that the market starts to slow down here. Waited for a setup that I like, a few key patterns that I look for every time that I'll talk about in a little while to enter in, confirm the trade, and then I waited for it to play out, and it eventually played out, moving up to the higher end of the range, and I was able to get out for a clean $1,200 trade pretty quickly. And so that's how I use supply and demand, because it's so powerful to simplify trading. There's so many indicators and concepts when it comes to trading, and I always found the best way is to focus on just one or two things, and supply and demand really changed that around for me. So I want to talk to you about the key concepts that I use every time I draw a supply and demand zone, so I know that it's actually powerful and it's likely that the market actually reverses off of it. Otherwise, it's so easy. Going into our first concept, it's so easy to draw supply levels everywhere and not know which ones are gonna hold and which ones are gonna break. And so for me, the first biggest thing is not looking at those levels in the middle of the range. I like to stick to then at an extreme of that supply and demand in the market versus being in that middle of that area, and you could have a chop and just not have something that's worth taking a trade. And so that's the first key concept, is stick to extremes in the market. I always find that for my trades, even though I have a 3 to 5 step checklist I look for every time I enter into a trade, it doesn't matter if everything on a 1 minute chart is aligning up perfectly and it looks like it's gonna have a great trade. If the big picture isn't aligned and saying like, hey, yeah, I think that we could bounce to the upside, or that we're at a extreme where the overall price is likely to have a snap back, then there's no trade. This is the most important thing when it comes to executing and confirming my trades, is things being at an extreme and also the big picture being aligned with what I think is gonna happen. Now, when it comes to drawing these zones, what I like to do is I like to see at a minimum multiple touches. So in terms of here, there's this swing right here, and then there's these two touches right here. And so what I did was I said, okay, hey, I think, when the market was trending nearly where it is right now, with that bounce we just saw, I go back this is me going back almost a month in data to find this level. And so I go based off of, okay, we have the extreme down here, and then we've also got a couple of bounces here. It looks like we kind of had a head and shoulders here, but essentially there's some chop in here and some bounces. And so that's, I think, okay, it's, why I draw a zone, and then I'm just gonna drag it across here to where essentially the current price is. And as the market came down here, I said, okay, I think it's likely we bounce off of here. And then it gets a nice, really clean double bottom. And then I go into a smaller time frame and look to see if there's a nice setup right here and I can catch a big swing higher. And so the reason why I draw zones instead of very specific lines for my horizontal levels is because it's a supply and demand zone. You don't know where exactly it's gonna bounce. It's gonna bounce somewhere in this area. Every time the market comes down and tests a level, things are gonna slightly change. Maybe the market will come down here and barely test it here, because in this instance, when it's coming down to this level, well, there's some news out, or for some reason, a lot of people want to buy it now, and it's gonna bounce way sooner. Or it pushes further down, people are less interested in buying it until it gets to an even deeper extreme. And then that imbalance happens and people swoop in, pick it up quickly, and then it rockets up. And so that's why you can see there's a big rocket in this case. And so that leads into our next concept, is when there is a massive move off of a level, I like to key into that as well, because if there is really aggressive buying or selling, it means that a lot of people came in the buying side, there was a lot of demand. And so it makes it more likely that when it comes back in the future, people are going to want to buy it. Or on the flip side, if there's a big selling, it makes it more likely that people are going to want to sell when it comes up to this area. Now, most of the time, I like to just look at the last few days for a lot of my levels because that's the most recent price action, and it's more likely that something's going to happen based off of that. If you zoom really far out and you have a level all the way from back here, when the market touches that again months later, I find that a lot of the time something has changed at that point, and if it comes all the way down here, I'm gonna look for that to potentially break. So I've got a free downloadable PDF that talks you through the 5 concepts that I use for every supply and demand level I draw. You can download it in the description or this QR code. I highly recommend getting it as an easy resource to look back on when you really understand these concepts from this video. Now let's talk about some keys of how do you know to the best of your judgment, because you never truly know and can never truly confirm if a supply or demand level is gonna hold, it's how the market comes into that level. And so you have multiple trends where either you have a very fast-paced, extreme aggressive move, or you have a healthy trend with methodical pullbacks, where it sometimes even breaks the trend, moves around, chops, touches the zone, and then continues to chop a little bit. But essentially, how I see it is when the market has a very fast-paced move like this, it's more likely to bounce at a zone just like this move right here. And the reason why is because it's an unhealthy move. The market, when it just has an unhealthy move in general, even if there isn't a supply or demand zone, it needs some kind of pullback to create that equilibrium. And when it hits that extreme of this supply and demand theory graph, there's gonna be so much supply in the market. If we quickly go back to the concept here, is because if it shoots down so fast, there's some crazy momentum pushing it and pushing and forcing price to be so cheap down here. But at some point when it gets so cheap, people are gonna start buying it and sellers are gonna eventually start to dry up, and you will have what is called a V bottom. And so you have that right here in this case. It actually did almost a double V bottom where it came down, spiked, supply kind of pushed it down lower one more time, and then as it hit here again, people came in and said, no, this is an amazing price, and it rockets up from there. And so this is how a volatile market works, because supply and demand is all over the place. And that is really, really good for trading. And for likely that a level will hold. Now, sometimes you'll have it to where it just blows through a level, and those are easy to avoid. And that's why one thing is, we'll get to my checklist in a minute, of why you have reasons that you look out for to jump in and buy in an area like this. You don't just blindly say, hey, I'm gonna put in a limit order down here, a buy order, that when this price comes down here, if it does, I just wanna get long no matter what it looks like because I think it's likely to go up. Well, that's not always true, because supply can be so powerful that it blows right through this level, and you have to look at the next level. And so those unhealthy trends, when they do start to lose a little momentum, I find it's likely that it reverses, and those are the best trades. Now, when a zone is more likely to break is, if maybe we can find a quick one here, is this was a pretty good zone right here. You know, this was a zone I was watching for a while. We had multiple touches up here. You could even drag it down and take this swing. This is a clear swing where it came up to that zone, bounced off. We had a lot of chop up here. It eventually sold off. And when the market came up here again, well, I'm looking at the big picture. And so the big picture is we've come down, sold off. There was a big news that caused a spike. The whole time after that news, the market was just kind of chopping back and forth. And well, pattern-wise, this is a bull flag right here. And if you look at the lows, they're essentially getting higher and higher. Every time, after the first couple times, the market would make a push up here, the swing low would get higher and higher. And then what that means is people are coming in and buying the extremes that where it gets pushes to the downside sooner and sooner. And so as it starts to, in my eyes, has a healthy move up here where there's moves with ups and pullbacks, and it starts to kind of sit here, and it kind of sat here and chopped around for a while, and it sold off, and then it comes up here and starts to sit here again. To me, that makes it way more likely that it continues higher. And this is actually one of the trades we looked at a minute ago that I just quickly showed. This is where that trend line of trending supply and demand worked out as well. You can also see as the moves move up, it creates those with the swings. And so this is the cleanest one right here where it popped up, sold off a little. And so you could say, well, this is a micro supply level, came back down to here, broke that, hit another supply level. It was kind of the highs at this point. Big area where it's likely to sell off, sold off. And then at this point you have multiple touches here to where I drew this trend line. This was actually before market opens, where it came up and it hit this demand trend line and also hit this previous supply level that turned into a demand level. So that's the interesting thing as well, is levels when they're broken can flip. And so in this case, and this happens all the time, where you have a high and then the market breaks that and it comes back and tests that high. And you can see this all over the market. If you just zoom out and kind of look, you can see here's another concept of it happening where the market came up here, put in a high, kind of sold off a little bit, broke above that, and then if you pretty much just draw these highs, it came up, bounced off of it, and made an attempt to keep going higher before the market started selling off the rest of this day. And so that's where, when I'm looking at the market come up into a level in a healthy way, into either a supply or demand level, I think it's more likely to break that zone, and I will avoid betting to the downside. And so even though the market came up to this extreme level that I was watching, and instead of betting to the downside, I said, okay, I'm not betting to the downside. I'm just gonna sit out on that potential trade. And I looked to take this long right here, betting that the market was gonna break and go higher. Now to tell you about the prize pool, NinjaTrader, the platform I use here, is having a $20,000 trading competition. You can join with a demo account, basically risk-free, trade in this competition. It lasts for 5 days, so it's actually over pretty quick, starting September 14th, which is a sick way to practice trading in a risk-free environment, but also be able to make some real money to start a trading account for yourself. So you can sign up for that using the link below or this QR code. Now let's go into how I confirm off these levels, talking about this trade actually. And so the first thing that I always use for every trade that it has to have is that supply or demand zone. I want it to come up to extreme or come down to an extreme. Now with this case, in this trade, it's a little bit more of a complex nuance to it that I hope you can use and take to your trading. Otherwise, the super simple version is coming down to these levels and looking for a clear double bottom and jumping in on a smaller time frame chart that we are going to talk about right now. And so that's number one, is having that level and having an understanding of the big picture of why, in this case, why I didn't want to take a short to the downside and I actually wanted to take a trade to the upside, which is the biggest key when it comes to trading. A lot of people that try and use this strategy, they'll just follow this checklist and they will actually get into spots where they shouldn't because they're going against the big picture of the market. The big picture is what is going to allow you to capture big moves like this versus coming into, some kind of level and thinking that it's going to do something else when, the big picture isn't really there. And so I start out every morning opening the markets at 7:30 my time, which is the market open for the US stock market. And so this strategy and all these supply and demand levels you can use on really any market or time frame, but I like to use them on the futures markets. I'm not going to jump into that too much right now. I have a whole video on how to understand how futures work. But basically, what I like to do is when the market opens at 7:30, I like to see some kind of movement. And I like to see it make that drastic move in one direction. Because again, thinking about what I just talked about, those unhealthy moves are likely to have good bounces versus the healthy methodical moves are likely to continue in a healthy methodical way. Now they totally can reverse, and I will take trades based on those sometimes, but it's a lot trickier and easier to get in a bad spot doing that. And so as the market came down to this area, to this supply and demand trend line, that bigger picture one is this line right here. And so again, even though on my chart I have a specific line, it's kind of harder to draw a trending zone like I have these. But I think of it as the same concept. If it's coming down to this area somewhere, that's good enough for me. It's gonna likely bounce somewhere in that area. And so what I looked for was it to create essentially a head and shoulders pattern. Once you kind of go into these smaller charts, all the trends and concepts work the same way because the candlesticks are basically telling the same story, but just on a different time frame and a different pace. And so that's why it's important to use a bigger picture and a 15-minute time frame to look at, okay, what is the big picture of what's going on? And then I like to go into the smaller picture and go from there. But every trade I look at, and you'll look at and if you look at my live trading videos across my channel, you will see pretty much every trade looks the same. And that's the best thing. And the way I realized to be profitable for me is to just try and repeat the exact same thing every day. It's boring, but it works. And that's all that matters when it comes to trading. We're trying to make money, right? And so what I look for is when it comes down to this level, I want to see a head and shoulders pattern. Essentially what that shows is it shows the swings in the market starting to shift. And it shows that this momentum to the downside is slowing down. And so here I was looking at this form right here and I said, okay, I like this. This big bear candlestick is almost like a final hurrah of sellers trying to push the price lower. And then when this big bullish candlestick comes in and reverses that almost in a blink of an eye, I say, hey, that's a really good fake lower, traps people to the downside if more people try and go short. And I like to get in with a buy stop order as it breaks above this high, because I like to get in based on momentum. Because I think, well, if I'm getting in on momentum, that's when the demand is starting to pick up. You can avoid sitting in this chop like this, and you can capture the easier move in the market. Now, when it comes to trading, you don't have to capture, you don't have to get in perfectly at the bottom or perfectly at the top and sell perfectly at the bottom. All you have to do is really, for me, I get in, if the swing is gonna go from here to here, I'm getting in and capturing this part. I'm getting maybe half of the move. But with how trading works, it's not about capturing a large move. It's capturing some of that move and increasing your sizing. I used to trade where I was risking $100 per trade. And a huge trade for me would be this much right here, $300. And now my sizing has increased, and that's how you make more money trading, to where you're risking $500, $2,000 per trade, and going just a small amount in the market can be a lot of money. And so I don't want to get too much into managing the trade, but the rough concepts I like to use is the same reason why I get in. What are the trend line doing? Where does it look like there is potential supply and demand? When it comes to managing, I like to focus on the 1 minute time frame patterns. Of course, I think the big picture is going to push higher over the day, but you can have a lot of big swings on a smaller time frame to make that happen. And so when it comes to trading and making money, I'm just looking for a scalp, really. And I'm just looking for it to make a move up in a small way. And this trade here was tricky. It was kind of choppy. The market's been really tricky lately, and it just kind of started to slowly grind lower. And I tried to be liberal with my stop loss and give it a lot of wiggle room, because I thought, hey, I really like this level. It's come down here and showed this really nice pattern. And if it needs to come down here and, like we just talked about, this could be the new demand level that was previously the supply level that these big candlesticks were pushing off of. And instead it's broken above that. Maybe it's gonna come down here, test it, and then push higher. And so that's the hard part about trading too, is adjusting to what kind of market you're in. And in the market that this trade was in, and the market currently is it's in a lot more slow, methodical movement. And so from there, patience paid off, and I was able to let the trade ride out, and it moved up to pretty much 2 times my risk. I was risking about $600 on this trade, and I got $1,200 in about 40 minutes. And this is something I repeat every single morning. Now, I highly recommend watching this technical analysis video right after this. It'll dive in even more about understanding structure and market patterns. And if you couple that with this supply and demand, you will drastically increase how you understand to read charts, and it will accelerate your trading immensely.